Welcome to another video and thanks for clicking on this one. In this video, we have a lot to cover and I would try my best to cover them in a methodical manner so that it all makes sense at the end of it all. And let's start with the Fed's meeting because I feel like it all ties everything together. The first thing is we know that they are keeping rates the same. It's going to be between 4.25% to 4.5%. However, of course, the rate you get in the market will be different from what the Fed's fund rates are. So unfortunately, if you're still trying to buy a house, or you're trying to get a car, you are probably still going to be getting similar rates as you've been getting all this while. However, there is I would guess maybe there's an end to this, hopefully in September, when there's a probability that it will cut rates, but this is not guaranteed. And that is the reason why the market actually turned somewhat negative and went down significantly before making some recovery towards the end. But let's cover that. So one thing I want to show you is this, right? The worry that the Feds do have is this. They believe that since this tariff situation isn't all sorted out, and as we know, as of today, there was still some tariffs still being imposed on India and also some materials like copper. Now, all of that to say that it's a very fluid situation that the Feds find themselves in, and hence the reason why they are not willing to cut rates too soon. At the same time, they are worried, of course, about cutting it too late. So it's about balancing two things: inflation and employment. However, employment has been quite steady for most part. It's not really high and it's not super low. So it's somewhat level, but inflation is still above the target. Now, one of the things that I would like to point to you is this. Let me show you this on my computer real quick. Government makes all these tariffs, okay, imposes them on countries. No, but of course we know that countries aren't the ones that are directly impacted by the tariffs. Well, it's the companies and manufacturers that are impacted, okay? But of course the manufacturers also cannot take all the costs of these tariffs, and so they impose it on the retailers as well, okay? And of course the retailers pass it down to consumers. Now, in as much as we can put these three circles into the country bucket, at the end of the day, the person that really feels it are the consumers. Hence the reason why the Feds are really worried about the impact of tariffs on consumers. So with that said, one of the things that we are looking at now is, well, the Fed is still waiting for more data before they can decide on either cutting rates or keeping it the same. And come September, they would probably have some data to help. Of course, more CPI data will come out, more PPI data will come out, more employment data will come out between now and then. So they have some time to figure this out. So if you're thinking of buying and of course maybe refinancing and things like that, you may want to wait until then. And of course, you know, there's no guarantees. Now, the next thing that I want you to keep in mind is that the GDP data that came out today was actually higher than expected. Consumer spending rose, which is not a good thing. All right, consumer spending rising definitely means what? The consumers are still in a very stable situation and they are able to withstand this brunt of the economy, okay? Even though prices may be slightly going higher, the consumers are still doing good. So there's no pressure on the Feds to actually cut rates at this time, apart from the pressure from the president and the dissent, okay? We have personal consumption expenditure price, which came out and it went up about 2.1% for the quarter. Core PCE, which is a personal consumption expenditures as well, is increased by 2.5%. So that is not really a good thing. Hence the reason why the Feds are likely to keep rates the same. At least they decided to keep the rates the same now. And if these numbers continue to trend higher come the following months, they are likely to keep the rate the same even in September. But let's hope, because the Fed wasn't really optimistic or didn't really show any signs of planning to cut rates in September. Everything is saying is that it's all based on the data that comes out between now and then. So again, Fed funds rate stays at 4.25% to 4.5% for now. Now let's dive into the next thing. Two things that I want to cover. Well, the first one is the Microsoft earnings and Meta. They both have really knocked it out, and of course their shares are pretty high up there now. Now, one of the things I've been saying is that, you know, when it comes to earnings and the timing of all of this, one of the things we're looking for is opportunities to buy. Remember, everything that has happened between, you know, 2 days, about 2 days now, the stock market has been selling off. But now that the FOMC meeting is out of the way, We know what is going on. Honestly, there isn't much to worry about going forward, at least for the next I guess week or so. But one of the things that you want to keep in mind, okay, is that we still have some big earnings tomorrow. And tomorrow we have the employment initial jobless claims. We have PCE index data, okay, July 31st, and then we have the another one, which is the on Friday will be unemployment report, an unemployment rate. So that is something to keep in mind for the coming days. Now, all this is likely to impact the stock market. We still don't know how all of this would turn out in terms of the Fed's policies and of course the government policies. But one thing I will always say is that remember, opportunities will always come. You just have to be engaged with the market to find these opportunities. And if you understand some of the movements that goes on that impact different sectors, you are likely to take advantage of those opportunities. One of the things impacting the freight companies like UPS and FedEx is the de minimis tariffs that is usually exempted on $800 value items. But now anything, whether it's below 800, above 800, coming from any country, will be subject to the tariff. All right. Hence the reason why the stocks of companies like UPS and FedEx is down even now. Now, remember, this is the risk, but at the same time, the opportunities that are presented when you buy into companies like this. And you have to understand how some of these policies impact those companies so that you can make a wise decision when you're choosing to buy or sell a stock. But remember, if you do not want to get involved in single stock companies or investing directly in a company, one thing I would say is that you can't go wrong with the ETFs that I always talk about: VTI, VOO, SCHD, SCHG, and so many more, right? You have all these options to invest in a basket of companies, and it would eliminate the headache of trying to pick the winning stock or company. If you have found value in this one, please don't forget to drop a like on it. Don't forget to subscribe to the channel, and I'd love to see you in a future one.